The week has kicked off in volatile fashion once again. Donald Trump's at the center of all of it. And certainly some of the messages that we've seen on Truth Social and Twitter essentially really do point towards the possibility that we're moving towards the end of the conflict. The message that we had seen over the course of the weekend certainly pointed in a different direction, but this really appears to be following the same blueprint of the trade negotiations under Donald Trump, where he threatened very elevated tariffs, and ultimately we get some sort of agreement with much lower levels. Well, it appears to be the case that Donald Trump is trying to find a way out of this conflict, and there is a light at the end of the tunnel, and markets are starting to react to that. So the question mark really is this the time to expect that reversal, and what exactly have we got in store over the course of the coming week as we head towards that deadline? So first and foremost, this is the message that we saw from Donald Trump on Saturday, essentially saying if Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from its exact point in time, then the US will hit and obliterate, of course, their various power plants, starting with the biggest one first. Now, this is problematic to say the least, because the world doesn't necessarily have it in its interest to make sure that Iran's power plants aren't running properly. The world does have it in its interest to make sure that the rest of the region essentially doesn't have any more destruction, right? The attacks that we've seen in terms of the initial attack on the gas plant in Iran and the retaliation in Qatar really already points towards long-lasting consequences of this war. Now, there's all this talk about we need to reopen the Straits of Hormuz, and of course that is important because that's what's blocking things. But the Straits of Hormuz can be reopened immediately, right? I know that it takes time for things to get back up and running. You've also got question marks about, like, okay, these, plants that previously have been running, now they didn't have the capacity to store it, and therefore they've had to shut it down for the time being, and therefore it might take 2 weeks to get back online. So certainly, I think for the most part, people are willing to look beyond something that's going to be maybe, it takes a week or two for things to get back up and running, or a ship that should have been in this part of the world is now going to be there. And, people are willing to overlook that to an extent. What people are less willing to overlook is permanent damage that needs to be essentially fixed. That's going to take an extended period of time. And that's exactly what we saw with 17% of the gas LNG capacity of the world's biggest LNG plant in Qatar going down, and they said it could take up to 5 years to get it back up. That means the world suddenly has major shortages of the likes of gas, of the likes of helium, of fertilizer, and other byproducts. That has a tangible impact, of course, on prices, and that has tangible impact, certainly when you're looking at some of these byproducts, on the price of, say, food that relies on fertilizer to be able to ensure that the crops don't die. So if they attack these power plants, the retaliation could be massively problematic for the long term. And that's more concerning to me than reopening the Straits of Hormuz. And that's where I think that Donald Trump has got it wrong in this instance, because essentially he's prioritizing the reopening of the Straits of Hormuz with potential action that could lead to long-term consequences that are even more problematic than the closure of the Straits. Nonetheless, it appears to be the case that he's used his old tactics when it comes to trade to be able to essentially threaten the worst case scenario and then move back from that. So remember Liberation Day, Donald Trump came out with his board, and everyone was wondering where the hell he got those numbers from, because they were so dramatically higher than markets had anticipated. He sort of just mumbled his way through it and gave some sort of justification for it. But everyone knew, including the journalists that were there at the time, that these numbers were a bunch of nonsense. But ultimately, he was just playing this same game, which is threaten the worst and then come out with some sort of an agreement that is much closer to the original expectation. Now, Donald Trump has essentially tried to play chicken with the Iranians, threatening to take out some of their electricity. You can see power plants and the like. That, of course, he knows will have huge consequences if he actually did it. And so as we got closer to the deadline, which is this evening, suddenly we see this from Donald Trump, taken as another taco, as they call it, Trump always chickens out, but essentially it means that it's just along the lines of that same strategy when it comes to threatening the worst and always bailing out in the last minute, because he doesn't actually want to blow everything up. So he said here, I'm pleased to report that the United States have the US and Iran have had good and productive conversations over the past 2 days regarding a complete and total resolution of our hostilities in the Middle East, based on the tenor and tone of the depth, tone of these in-depth detail and constructive conversations, which will continue throughout the week. I've instructed the Department of War to postpone any and all of the military strikes against Iranian power plants and energy infrastructure for a 5-day period, subject to the success of ongoing meetings and discussions. So the 48-hour deadline's been pushed, and that's something that we have seen in the past from Donald Trump. We've seen him essentially come out as you get closer to the deadline and say, actually, we're having good conversations. Let's just push it. I don't actually want to end this. I want to find the right solution. And so we're seeing more of that, really. So we've seen this playbook before. What this, to me, means is that Donald Trump does want a way out of the conflict right now. The problem is, it was only a few days ago that he spoke to the press and said he doesn't really have anyone to speak to in Iran. He's pretty much killed them all. So quite who these discussions are supposedly taking place with remains to be seen. And it feels like right now the Iranians have got the upper hand because they're controlling the Straits of Hormuz, and their tactic all along was to try and raise energy costs and lengthen this crisis out. And so they're quite happy probably to continue to do that. Most of the people that they wanted dead are dead in terms of the US, so they probably don't know who they're hitting now. They're just going to continue to bombard different places, many of which will be fortified, and maybe, you know, you would think by this point that the high value targets have kind of already been targeted. Hence, he's now talking about taking out energy plants and alike. So it's got to the point where, you know, the US is certainly in a bit of a pickle, and there's the question mark on whether they're going to land people onto Karg Island. That, of course, would be greatly problematic because of sitting ducks, essentially. And so best case scenario, they manage to take the island and they allow ships to essentially flow freely through the area. Okay, that's great. But then you've still got the fact that Iran has a huge amount of capabilities to strike the island or other essentially refineries or energy facilities in the GCC. So it might be the case that they take the island and these boats can go through, but then all of a sudden the power plants or the oil and gas facilities that feed them, they get targeted and they go down. So it's not as easy as just saying, oh, we'll just take the island and everything will be fine. So that doesn't seem like a great solution. The US definitely will want to find a way out. So here are the positives that we've seen since. In actual fact, we've seen the negatives, because almost immediately afterwards, we saw Iran apparently saying that there's been no direct or indirect conversation with Trump. And then essentially they're saying, look, he's just backed down because he didn't actually want to fulfill his threat. That may or may not be the case. And that certainly has led markets to then start to question whether the moves that we have seen immediately after Trump's post earlier today were justified. But we have then seen that followed up by this, which is a couple of bits that I've found. So the top one essentially saying that apparently Donald Trump said to CNBC that they'd had very intense conversations. They were hopeful something very substantive can be achieved. And crucially saying, I haven't actually included it here. Okay, so he's essentially saying that because they've killed so many people in the leadership, that in actual fact, regime change has, it's at the bottom, yeah, okay. You can describe it as regime change. I mean, that's crazy, because essentially you're going to have all the same people running the country, right? So you're not changing the regime, you're not changing the party that are running it. But you have killed many of the leaders within that, and there's arguments to say that the people that are left are probably going to be more hard line. So to say that this is like the regime change that the people of Iran wanted is a little bit ridiculous, quite frankly. But nonetheless, that's where we stand. And so, you know, what this means to me, and certainly, you know, when I look at so just to cover this bottom message as well. So Turkey, Egypt and Pakistan have been the ones passing messages between the US and Iran in order to de-escalate. So that to some extent might justify the question marks about we haven't been in touch with the US, but not really. And you would say it's probably that sort of dysfunctional leadership situation in Iran right now might go some way to explaining exactly why some people would say there have been no conversations, and other people would say, yeah, there have been conversations. We've been having them through Turkey, Egypt, Pakistan. It's just who's having the conversations, because the leadership, much of it has been killed off. So it really leaves us in limbo, quite frankly. And I just wanted to sort of take you onto the charts and just see exactly how things are shaping up and sort of discuss it from that perspective. So from the first point of call, let's look at this chart. So this is the hourly time frame that I've got. Brent crude, gold, the US 2-year, the dollar index, and the Dow. And you can see essentially sometimes we see, say for gold here, it looks like it's a lot of a smaller move here, but essentially if I was to go now, the log's not really helping it. Essentially, if you look in the sort of short term, then let's just put everything. I can't put everything on one side because I've inverted some of them. Essentially, they're moving in tandem, right? I mean, you can see that here. It's just sometimes when you've got all of them plotted on the same chart, they are still going to be on different orders of magnitude. But what we're seeing here is simultaneous moves up and down. Now we have got the inverse for some of them. So the likes of gold and equities have been inverse to the rest of these. And so essentially what we're seeing here is, a strong value of Brent crude and oil is driving the 2-year higher, so expectations of rates and the dollar index, and it's driving down equities, it's driving down gold. So the flip side of it is what we've seen today, and let's go on to Brent first and foremost. This is the 5-minute chart, but this is the hourly. So you can see the move that we've seen today. That is driving all of these other markets. So when we're talking about shall we buy the dip, I guess the question mark is this the top for Brent crude? Is this the top for oil markets? So for the sort of wider perspective, you can see that by and large, this is the kind of area that generally we see tops take hold. Your 115 up to 130 kind of area, that's generally where you see these tops happen. That doesn't necessarily mean that it will happen this time, because of course, this is a pretty unprecedented event that's happening at the moment in terms of the amount of crude that's being taken off the market and the long-term damage being undertaken in the region to some of the facilities. Nonetheless, what's key here is that what we have seen, at least, is we've seen that prior high sort of matched almost. Now we're seeing a breakdown through these swing lows. Now, of course, the key thing here isn't technical analysis. The key thing here is what happens in terms of these negotiations. Do they ultimately find an agreement? Do we see the Straits of Hormuz entirely opening? All of these things can't be told on the chart. It can't just say just because it's, we've got a potential double top in the offing, that means that it's going to work out one way or another. Bear in mind that the US is sending troops over to the region, apparently. And so that, of course, would be a huge escalation if we saw troops landed on Karg Island. I sincerely hope that doesn't happen. But yeah, so for the time being, we do still have, despite those sort of the pushback about, we're not actually in discussions with the US. At the moment, that initial flush lower, we've regained some of it, but now we're moving lower once again. So markets are following through on this move, on the idea that this might be the beginning of the end. I would say the takeaway from this is that Donald Trump very clearly does want to find a solution. He's just trying to find a solution that essentially has the right narrative for him to be able to sell to the US electorate in a midterm year. And the Iranians, that's a big question mark. So really, it just comes down to what kind of deal can they strike. There's no guarantee that they can. And so certainly, anyone trading at the moment really needs to be glued to their socials, because any update has a propensity to move things very, very quickly. Let's just see how quickly on this occasion. So presumably this is the moment that post came out, and you're looking at 1, 2, 3, 4 minutes to the low. That's how quickly you've got to move. And I guess it also sort of highlights the fact that, if you don't get into that initial move, that doesn't necessarily mean that you have to chase it immediately, because sometimes, we do see things sort of come back and settle a bit before we then see a continuation of that, which is potentially what we're seeing at the moment. So oil looking like it potentially tops at that same high, at that same sort of area of resistance that we've seen respected before. But questions, of course, still remain. In terms of equity markets, this is the Dow Jones Industrial Average. And you can see here in terms of price action, we've taken out this swing low at 45697. We've taken out that sort of ascending trend line area. And from the wider context, this is the monthly time frame, you can see that by and large, we do generally see more protracted moves lower. For this entire crisis, given exactly what's happening at the moment, to just be this and then we go back up to record highs, that doesn't seem likely. And the big thing here is, what's the outcome from this? Even if we do see a resolution right now and we see an agreement, okay, fine, we reopen it. You've got the question marks about the loss of supply going forward, the amount of time it's going to take for things to get back up and running. Ultimately, it's about the impact on inflation and the impact on monetary policy. And the same goes for the likes of the dollar index and for gold. There are implications for this. And if this does cause a spark in terms of inflation, then it will have a tangible impact. So we could end up seeing a protracted period of sort of question marks if we see inflation really rising, and that's detrimental to businesses and profit margins off the back of that. And you can see that in terms also as with gold. So if we're looking here in terms of gold, we've come down towards this ascending trend line. Again, technical analysis won't tell you everything, but certainly we've come into this extended area. Let me just see, this should be down there. So we've come into that extended reach and now started to move higher. And so you can see on the daily time frame, we've almost recovered an incredible day of declines, because at the beginning of it, we saw almost 9%, I think. There you go, 8.85. And now we've recovered almost all of it. I mean, what a day. Unbelievable. But yeah, really, this is going to come down to rates as well, right? So if you go US 2-year and we put that onto this chart, you can see this is a view on where markets think rates are going to go. So when you think there's going to be rate cuts, as we've seen throughout much of last year, so the 2-year comes down. But then you've seen exactly what's happened over the course of this conflict and a sharp rise. Now, the inverse correlation between the two, as we see here, let's go on to the hourly time frame, you can see very closely correlated. So as we see expectations of additional easing, so it helps gold. And as we see expectations of a hawkish Fed, so it hinders gold. What my point here is that, yes, we can see, if we saw an agreement right now, we can see the 2-year come down, we can see gold moving higher. But I don't think we're going to get back to where the 2-year was previously because of that new sort of baked in inflation expectations. So that means that we're probably not going to get back up to the same high in terms of gold immediately either, even if we did see some sort of rally coming into play. So there's a huge amount to be made up. I mean, I think it was down 20% when I checked earlier from this recent peak. But it previously went down to 24%, and now it's like 17% down. So if we do see that agreement, yes, as long as the 2-year comes down, which it likely would, then we'd be expecting that breakthrough to come towards the upside. But I don't expect the 2-year to come down to where it was, and I don't expect gold to go back to where it was either because of that. And arguably, you could say, well, some of the uncertainty of the war is out the window now. I'm not sure about that, but people saying that there was an amount sort of priced in around the possibility of a war with Iran, and because that's now done, well, it's not yet, but let's say if it was, they'd say, oh, if it's done, and you can take out that war premium. But certainly, it points towards the idea that Iran can pretty much do this when they want, quite frankly, because they know that they can use you can use attacks against their neighbors as leverage. So then we've got dollar index. Again, much like with that ascending trend line for gold, this has come into a really key area, and with oil as well, to be fair. So all of these markets coming into really interesting areas that previously have held. So you've got these areas of resistance held once again and falling back as a result. Now, you've got this ascending trend line in play as well as a potential area of support over the near term, and certainly the question marks still do remain. I mean, ultimately, this is a 5-day deadline, so it's another deadline. It does point towards a possibility that we're sort of heading in the right direction. So if we see additional sort of positive tones coming out, you would expect to see the 2-year yield coming down. You'd expect to see the US dollar following that as well. The 76.4 at 98.98 alongside the ascending trend line at the moment provides a key area of support. But right now, things are starting to turn. I would say this is, in my mind, the beginning of a process to find a solution. I think there's going to be some bumps in the road. I think there's still going to be attacks over the course of this week. There's not been any mentioning of them stopping all attacks. So we're still going to be hearing about bombs over the course of the week. And it's not a given that Donald Trump's also going to be constantly saying about things heading in the right direction. He might do the opposite. He might say that things are going poorly just so that he can potentially get some sort of concessions or try and get some sort of deal over the line. Who knows? And also bear in mind that amphibious sort of land unit, there's probably going to be more stories over the course of the week talking about them heading in that direction. So then people start worrying about what if they land on Carg Island? What would that mean? So I think there's going to be a lot of bumps in the road. I don't think it's going to be a straight line move from here just because apparently there's a direction, a pathway towards an end to this conflict. Doesn't mean we're not going to necessarily see any more volatility. I think there's going to be plenty more of it in both directions. But hopefully we are now at least seeing the light at the end of the tunnel. People can call it a taco. I guess it follows exactly that same pattern that we've seen Trump use in the past. But this is the biggest game of chicken I've ever seen in my life, quite frankly. I mean, you've sat at poker tables where people have gone all in with a handful of nothing. But like Donald Trump right now is threatening something that could have absolutely huge consequences. And I'm very glad to see that instead of that happening this evening, we're seeing a move in the direction of some sort of an agreement, which hopefully then helps the healthiness of everyone's portfolios. Because quite frankly, you can try and prepare for a period where markets are selling off, recessions or war or whatever. But when it comes down to it, everything sells off. We're looking at markets this morning, and ultimately we were seeing oil and gas companies selling off despite the fact that oil was on the rise. We were seeing defense companies selling off despite the fact that we've got huge war going on. And many of these countries around the world, whether it's in the Middle East, whether it's in Europe, whether it's in the US, are probably going to be thinking they need to up their defense budget in a big way. So they are major benefactors from this. But nonetheless, they were selling off. And that goes to show when there's a liquidity crisis, everyone just sells everything. And pretty much the only thing protecting you at that time is cash, with a view to buying in at a lower price. Excuse me. I hope that's been useful. Make sure to like, subscribe, and follow for more. My name is Josh Mahony, Chief Market Analyst at Scope Markets. Have a great day.